Turning to business news now with Giles Beckford, our business editor, who's joining us from Wellington. The latest survey of business opinion by the New Zealand Institute of Economic Research shows sentiment at its highest levels in 2 years. So that's confidence, Giles, is it? Is that a cause for celebration?
Well, yes and no, John. It's, I think, on the superficial level, it's certainly good news. I mean, New Zealand is would be the envy of most developed economies, with growth at around 4%, which is what the survey would indicate. Although in real terms, we'd have to figure that the growth rate will probably be a bit below that. But it does mask a few issues, and one of them is the difficulty in finding the right skilled people for the right jobs. And firms' hiring intentions in this survey were at their highest in 43 years, which tells you about the pent-up demand for labour. But the firms were having the worst time in nearly a decade in finding the appropriately skilled people. And that does raise the question about, are we actually working, do we have the best system for training people and filling the demands that there are? Migration is going some of the way, but of course, the more people that you bring in from overseas, while you might get a temporary solution, it does depress wage rises here in New Zealand, and that makes people slightly cautious about spending. So those are the sort of underlying issues that a supposedly strong confidence survey can hide.
Okay, gosh, it's fascinating. 43 years. That's extraordinary. Can you put this in an international context? Where do we sit? You said at the beginning that theoretically this would make us the envy of most economies. Is that the case?
We are, I think, at the last measure of the OECD, I think the number 3 or 4 strongest economy in the what you would call the rich countries club. So we outperform Australia, the United States, all of Europe. There are very few countries that are doing better than us.
Okay, so what is the survey telling us then about where we're going?
Well, it tells us that we're doing well, but when you think about it, I mean, I had an interesting discussion with Christina Leung, who was in charge of the survey for the NZIER afterwards, and I said, it's a pretty cheerless sort of economy at the moment. I mean, a lot of people say that they're surviving, but you don't get much feel that they're thriving.
Yeah, certainly in Auckland, people, lots of people talking about the fact that the cost of living is so high that whatever's going on means nothing to them.
Well, you say the cost of living is so high, and yet our inflation measure is only 0.4% for the year through to June. And likely when we have a new measure in a week's or so time, we could get down to 0 annual inflation rate. From that point of view, you'd have to say that people are far more sober-minded, far more cautious. Look at the consumer confidence surveys, and they say that quite a large number of people don't feel any better off now than they did 12 months ago. And from that point of view, you'd have to say that perhaps the largesse, the 4%, the 3.5% economic growth that we're getting is not actually being spread around all that much. It's being sliced pretty thinly, and for that reason alone, people just, while they might be confident enough, they're not totally optimistic about it, and that's breeding caution about what they do and the way they think and spend.
It's fascinating analysis. Thanks, Giles. What did the markets do today?
Well, I can tell you a short time ago, the Reserve Bank of Australia held its cash rate at 1.5%. It said that the Australian economy is probably a little slower than they had figured, China also, and that household incomes pretty cautious and restrained, but so is inflation. That's seen the currency 95.1 Australian cents for the Kiwi and 72.9 US cents. And a bit of a slow day on the stock exchange, top 50 down 20 points at 73.52.
Giles Beckford, our business editor, thank you.